the taxman is always concerned about this particular principle, equity and fairness. So because he's always concerned about equity and fairness, he don't want to compromise on that. So if one accountant come with a reducing balance, one accountant come with a straight line, one accountant come with cash accounting, one accountant come with accrual accounting, one accountant come with transaction full of personal things, then at the end of the day, the taxman will be agitated because you can't leave your profession and come and be defeating his profession for him. So at the end of the day, he must examine your account. So when he's examining your account, in the taxation terminology, it is called examination of accounts. So whenever you prepare your statement, you sit with the taxman, he look through the statement and see that, okay, these things you have placed in your account, they are not going to defeat his equity and fairness principle. If they are not going to defeat it, he will allow you to present it, then he will tax you accordingly. So any expenses that he will allow you to place there is called allowable expense. Any expense that he will not allow you to place there is called disallowable expense. And before he allows expense or disallow expense, this expense must possess certain criteria. And the first criteria is that, number one, the expenses we are talking about must be wholly, it must be exclusively, and it must be what? Necessary, laid out and expended for the purpose for which it was intended for the production of income. Let me state it again. For an expenses to be allowed or to be considered for tax purposes, these expenses must be wholly, exclusively, and necessarily spent for the purpose of income generation of a company. Now, let me explain the terms one by one. When we say wholly, we mean that the total amount we are talking about here. Now, if you say the money you spend is for the purchase of a fridge, then all the money you said you have spent, if it is 10,000, all the 10,000 has been spent on the purchase of fridge. It shouldn't be that you have spent 8,000 on fridge and 2,000 on the purchase of shoe. No. The 8,000 that is spent on fridge will be allowed. The 2,000 on shoe will be disallowed. Are you getting it? So if you say you have spent this on that, everything must be spent on that. When we say the expense is exclusively, it should mean that it is critical. Are you getting it? The spending of that money is critical. It is very, very important. The spending of that money is crucial to the operations of the business. Should be exclusive to the operations of the business. If we did not spend that money, the business cannot go on. We must spend that money for the operations of the business to be successful. Are you getting the scenario? So that is the exclusively nature of the expense. The expenses should be so important to the extent that without that spending of that money, the aim of the organization cannot be achieved, or the operations of the organization cannot be successful. Now, when we talk about necessary, the expenses must be necessary. Why should the expenses be necessary? The expenses should be important to the revenue generation of the business. The income we are earning, these expenses should contribute to the expenses we are incurring. I get it. The income we are generating, the expenses should contribute to that income. So if the expenses is not incurring to that income, then it's not important. So for example, you are spending mobile data to get something in return. So if what you are getting in return, the mobile data is not contributing to it, then the mobile data is not necessary. So in our learning here, the mobile data is necessary. Why? Because what we are getting in return, the mobile data is what is contributing to it. And the mobile data is exclusively, because without the mobile data, we cannot execute the class. That is what that particular statement means. So you can be seeing a question that they ask you, they lay the statement, and they ask you to explain these terms. Exclusively, wholly, and necessary. You should be able to kill it one time and get out. Now, the second criteria is that these expenses must not be of a capital nature. When we say the expenses must not be of a capital nature, it should be a revenue expenditure. The expenses should be a revenue expenditure, not capital expenditure. And from our level 100, you know the distinction between revenue and capital expenditure. Revenue expenditures are expenditures that the benefit derived from them elapse within 1 year, or the benefit of those expenditures are consumed within 1 year. But capital expenditure, the benefit of those expenditures are consumed more than 1 year, or they elapse more than 1 year. Are you getting this now? That is capital expenditure. So the expenditure or the expenses you are incurring should not be expenses that the benefit is going to be more than 1 year. So when I tell you that I buy personal computer, then we buy refill water for the office. You can see that refill water can be consumed within 1 year. A personal computer cannot be consumed within 1 year. It can stay for 10 years. So personal computer and refill water, one will be allowed, one will be what? Disallowed. So though the personal computer meets the first criteria, the wholly, exclusively, and the necessary criteria, it does not meet the second criteria. The second criteria that says that the expenses too must be a revenue. Now this one is a capital. So if you don't meet the two criteria, you are out. You can meet one, you cannot meet one. You must meet all the two, because before it can be allowed as an allowable expenditure. So some of the allowable expenditures are research and development expenditures. So when you see research and development expenditure, is an allowable expenditure. Bad debt. Bad debt is an allowable expenditure, but the bad debt must be specific bad debt. It should not be a general bad debt. So when you just write bad debt in your books, they will disallow it. But when you say bad debt of units, then it can be allowed, because you are specifying the particular data. So they said the bad debt you are declaring should be in relation to a particular data. You must state which debtors are those before we can allow you. But when you just say bad debt, you don't state any data, massa, they will disallow it. And secondly, provisions are disallowed. We don't make provisions. So when you put in provision in your account, they will disallow it. So provision for doubtful debt, they will disallow it. Provision against long-standing debt, they will disallow all those things. I get you. Good. Then when we go to tax losses, I get you. Tax losses brought forward are allowable, but they are for a specific number of years, up to specific number of years. I get it. So I think up to 2010, they will allow it. But any tax loss after 2010, they will disallow it. So for example, you have been given a question, and the question is, let's say 209. Know that you allow it. But if the question is more than, let's say 209, you disallow it. That is basically what they mean over there. Then we have repairs and improvements. So repairs and improvements are basically allowed, but if the improvement is for extending a facility or extending the life of the fixed asset, you disallow it. So let me do an example. There are cracks in the building, and then we have repaired the cracks. or we have painted the building. They are all forms of repairs. We allow it. But where we are changing a single room into a chamber hall, or we are changing a chamber hall into a single room kitchen and porch, we are extending or we are improving. So this one, they will disallow it. That is what they mean. Then we have financial costs. We have donations. Donations are allowable, but the donation should be to a worthwhile cause. The donations must be to a worthwhile cause. When we say worthwhile cause, what do we mean? The donations must be to approved causes or approved um, approved schemes. So when the government has not approved it, they cannot allow it. So let's say you want to donate to, let's say, Makola Youth Association or Tema Youth Association. The government have never established anything called Tema Youth Association. So when you put it in your financial statement, they will disallow it. But when you go and donate to some place like Osu Children's Home, you don't understand why when people wake up, they are going to donate at Osu Children's Home. Are there not other children's home in the country? The people always go to the registered ones, because if they spend 2,000 and they put in their account that they spend 5,000, at least government has approved it, so they will allow it. I get in the scenario. But when they go and donate to certain institutions and then it is 2,000 and they put in their account 5,000, in fact, they'll disallow everything, if even they are speaking the truth. So schemes approved by government, when you donate to those schemes, the government will allow you, or they will allow you for tax purposes. But when you go and donate to unapproved schemes, they will disallow. Now, when you donate to a development of sports, it is allowed. They are not saying go and develop to a football club, but donate to the development of sporting activity. So let's say Ghana is going to Olympics. They go and donate to the Olympics Committee or Ghana Olympics Club. Yes, it is allowed. It's for the development of sports. Or you have taken an aspect of sports and then you are trying to develop it, like what Magnan is doing. It is allowable. Good. Now, advertising. Advertising too is an allowable expenses, but it is an allowable expenses if the advertising you made is in the print media or in the visual media, that is on television and radio and newspapers. When you do the advert on billboard or signboards, it is disallowed. And in those taxation terminologies, the disallowed one, they normally call them advertisement on neon sign. So when it is on a neon sign, they disallow it. Okay. Legal and professional fees are allowable. So if these legal and professional fees are into protecting of the company's assets, collecting of trade debtors, defending the company rights, and other current company matters, it is allowed. But where you go and pay legal fees for your driver driving carelessly and they fine you, master, they will disallow it. When you go and pay legal fees for tax appeals, you didn't pay tax and then they fine you and you are, no, they will disallow it. Are you getting the scenario? Good. Then defalcation, when employees made mistakes that are risen or have arisen as a loss to the company, it is allowed. Then when the manager or the management make mistake which has arisen to loss of the company, they will disallow them. So these are some of the allowable expenses. General expenses are not allowed. So when you write the general expenses, they disallow it. You must tell us the specific expenses they are talking about. Okay, salaries and wages are allowed. Subscriptions are allowed. Removal expenses, traveling expenses, most of them, interest on loan, they are all allowed. Now, one thing you should know about allowable and disallowable is that when the expenses is not what it raises question, it is disallowed. I get you. So let's look at the disallowable expenses to domestic expenditures. Any expenses you make which is private, which is in your domestic home, and you bring it to the business, they will disallow it. Any domestic expenditure, they will disallow it. You pay income tax and then you are putting it over there. Income tax, they will disallow it. Interest expense, you pay bribes, you pay dividends, and you are putting it over there. They will disallow all those ones. I get it. Good. So any domestic expense, they will disallow. Trade provision, general provisions, they will disallow. Then one of the disallowable expenses that one there, they will not even ask you anything, right? Depreciation. That one there, when they see it, full rough. When they see the depreciation, it even angers them. So the depreciation, they will disallow it one time. And it is in place of depreciation, that is why we have capital allowance. And I believe when we were treating capital allowance last semester, it has been explained to you why capital allowance and why not depreciation. And I think I've also explained it here from the beginning. So depreciation, the one you see, don't even ask question. Just take it out from it. It is a disallowable expenses. Okay. So basically, these are the theoretical aspects when it comes to taxation of companies. If you have any question, you ask me. If you don't have any question, then we will be moving straight away to the first illustration that I placed on the page. I think I placed the two illustrations on the page, which is God is King illustration, and then I think I also placed that of Leroy on the page. So if you have any question, you ask me. If you don't have any question, then we can move on. Are you all following? I've unmuted you. Who is not following? Okay. All right. Comfort, are you following?
Yes, sir.
Good. What about Mercy?
Yes, sir.
Good. All right. So the questions I placed on the page, you can go to the question, the very first question. And I believe by now you have abreast yourself with the question. So I'm just going to project my solution, then we go. So this is my solution screen. That is for God is King. Let me share it like this so that at least you can all see. So God is King is there for you. Now, when you look at the question, you can see that you have been given the trading account or the income statement for this particular person, and he has declared gross profit of 22,000. He paid rent income of 650, and then net profit of 11945 with some expenses. Now, when you look at the expenses of salaries and wages, no two ways about that. It is allowable expenses, so they will allow it. Subscriptions and donations. Now, you know they have made a caveat, or they have given a caveat that donations, when it is to a worthwhile cause, they will allow. When it's to not a worthwhile cause, they will disallow. So they will ask a question over there. Now, this donation, who have you donated to and where? Then you start to be saying it. I get it. Now the subscription to when it is to a registered organization or your mother association, it is allowed. But when it is not to a registered mother association, they'll disallow it. So they started asking questions. Then in the footnote, they said, oh, subscriptions and donations include miscellaneous donations to OSU Children's Home of 60 Ghana cedis. So for the questions they asked them, they can only justify the 60, the one they pay to the OSU Children's Home, 60 Ghana cedis. The rest, they could not justify. So it means that we will allow the 60, the subscription that they pay 200, we will allow the 60, we will disallow the 140. That is what it means. Audit fees, no two ways about that. It is allowed. Depreciation, I told you that one, they will not even ask a question because they will take it out. So they will ask you any question about that one. Legal expenses. Legal expenses, it is allowed. So they will give you the benefit of the doubt and then they will go away. Office rent, allowed. Repairs and maintenance. When say, you didn't say repairs and improvements. So they will not ask you questions about the improvement side. They say repairs and maintenance. So it is allowed. They will take it like that. Bank charges. Bank charges. No. They will ask you question. What sort of bank charges are those? Does it mean that there's dividend there, then you are just adding it to it, or exchange gain and losses somewhere? That's okay. Bank charges include loss on exchange rates of 450. So you are now, you go and do your own exchange trade and you made a loss of 450, then you are adding it as a bank charge. So they'll disallow the 450. Registration and license, good. It is for a worthwhile cause, so they will allow you. Are you getting how it is? Then electricity and water, yes. Sundry expenses, they will allow. You see that it didn't say general expenses, it says sundry expenses. So all these things you are learning here as an accountant, when you get to the field, there are certain terminologies you start to be learning. You will not use them. Because when you use them, it is going to implicate you, the accountant yourself. So there are certain terminologies, you will not even open your mouth to use it. Are you getting me? For tax purposes, you shut your mouth, you open your mouth and use it at all. So when you get there, you understand. Then you understand why they said the accountant has been adding zeros and ones. You understand. You now also understand the notion where they say that whenever the accountant prepares accounts, he has an account for the company, he has an account for management, he has an account for the shareholders, he has an account for the investors, and then he has an account for the tax people. So one account, they have replicated it in a duplicate of 5 with different figures, but they know what they are doing. Every account have a purpose it is meant to serve. I get it. Good. So when you look at my solution and attempt to answer the question, you bring your net profit declared as 11945. So let me zoom my screen so that you see what I'm trying to say. 11945. Then bank charges 450 is disallowed. So you are adding back the disallowable expenses. Yes, Mercy hand is up.
My stupid, we can't see you. Do it as it was.
I should, it's too big.
You zoom too much.
Is it okay now?
Hello?
Is it okay? It's okay.
Go back small. Yes.
It's okay now.
Yeah, thank you.
All right,
Yes,
good.
please.
All right. So as I was saying, so you bank charges 450, and then they also told you that sundry expenses include quarterly income tax paid of 35. So in that sundry expenses that they will also ask you a question, you told them that, oh, I paid income tax of 35. They said, Massa, what the hell do you mean? Take it out. So you can't pay tax and then you now be putting it in your account for the government to pay the tax for you again. No. It doesn't work like that. So you take the 45 out. Then subscriptions, as I told you, only 60 is for Osu Children's Home. So the 140 is disallowed. Then depreciation 1,200 is disallowed. So you add back your disallowable expenses to the net income, you get 13770, and then you less your allowable expenses. So in an attempt to less your less allowable expenses, your rent income 650 must be less. Then your capital allowance brought forward 250 in the question. Capital allowance brought down 150. So you add the 3, you get 1050. So when you less the 1050 from the 13770, you get your chargeable income of 12720. And then you tax at 25%. And when you tax at 25%, you know the corporate tax rate now is 25%. You get 9540. Yeah, Eunice, your hand is up.
Yes, Emma.
Yes.
I want to ask about the auditor's fees and then legal expenses.
Yes.
Because I can't see it in the solution.
Yes, the auditor's fees is allowable expense. They will not ask you any question about that one because it is already allowable. Legal fees, it is allowable. Are you getting me? It is only when the legal fees is for you paying bribes and other tax laws or other tax appeals that they will disallow it. Are you getting it? But when you pay legal fees for fighting of the company rights and all those stuff, they will allow it. Are you getting the scenario? So basically, in the footnote, the notes there are purposely for yes. So in that manner, whenever they give you the question, the expenses that raise questions, they will give them details. They will give you detailed explanation about them in the footnote, with the exception of depreciation. Because depreciation there you should know. Are you getting it?
Okay.
That is basically what it means. Any question? If you don't have any question, then illustration. The next illustration I place on the page, you have the next 5 minutes to look at it, and then we'll see what to do. The second illustration. So those who are copying should copy fast, and then look at it. Then we come and continue.